Off. Welcome everybody. Good evening. This is the Thursday evening Viper trading webinar. Tonight's topic is trading transitions, spotting transitions in markets and how to trade them. Before we can get over to some trading charts, we need to go through our standard disclaimer, so let's go ahead and knock that out of the way. All communications from Viper Trading Systems are for educational purposes only. Futures trading does involve risk, and there is a risk of loss. Nothing contained in this webinar or other webinars, including the live trading room, are to be construed as investment or trading advice. And of course, everyone in here does know that you do trade at your own sole discretion. If you're just coming in, don't worry about it. You haven't missed anything. We're just kicking off here, getting ready to get started. Let's see here. Going to show. So I'm going to start off with the ES chart, which is right here. Here we go. Okay, so let me explain what you're looking at here. This is the E-mini S&P futures chart. Some of you are still visiting for the week, and some of you are on a free trial. So if you are, and you've been visiting the live room, welcome. Welcome to this Thursday evening training webinar. Should be a good one. And so let's take a second to review what you're looking at here. The E-mini S&P futures are one of the instruments that we like to trade in the live room. The full E-mini contract is $50 per point. Each point of movement is worth $50. There are 4 ticks per point. Each tick is worth $12.50. We are connected to the data source from our broker, NinjaTrader, and that is providing the data feed that you see here with all these bars. This is a 2-range chart. You can put up a 4-range chart like you see in the live room. And it would pretty much look the same. You just get a few more bars. I like the 2 because you get a little more granularity around some of the entries that I really like. Now, if you just were connected to the data feed without our indicators, the Viper indicators, you would just see bars sort of randomly going up and down. And it would be really pretty tough to see where to get in and out and to take trades and what markets we're doing. And so what we did years ago is we created the background colors that you see right here. And I'll get into the meaning of some of this in a minute, but I just want to give a quick 30-second overview. The bar colors are our indicators. The swing levels you see right here, see these little swings, see the swing levels as they occur. The power meters, which are the 4 trends on the chart. We have these alerts, pretty new indicator. You can turn those on and off for mid-band shorts and longs, minimum criteria, and phantoms. We'll talk about these in a second. Predictors are real-time swing levels. Button here to turn them on and off. You can see that when a market is fairly range-bound and sideways, these support resistance levels are all going to be kind of even with each other. Very sideways manner like such. And then when the market's going up, like in an uptrend, you can see that everything is stair-stepping up. And of course, the most prominent thing on the chart is the bands in the mid-band. So counting from the bottom, we have band 1, 2, 3, 4. The top of band 2 is called line 2, this red line right here. The band in the middle of the 4 of the 8, so 1, 2, 3, 4 right here in the middle. This is called the mid band. See the thick middle band in the middle here? Notice how when the market's sideways, it's flat. And then when the market starts to step down, steps down. When the market starts to stair step up, it steps up, takes on a blue color. And then, of course, above the mid band itself, we have the 4 bands above it. So this would be in band 5, 6, 7, 8 is the outermost band. and the thin green line at the top of band 6 is called line 6. So just to give you some orientation here, so many of the trades that we take are centered around those 3 lines. So they're very prominent in our trading: line 2, mid-band, and line 6, depending on what the market's doing. So when we talk about a market making a transition, a lot of people sometimes are a little bit confused about that, because many traders think that when you say transition, that you're going to go necessarily from, say, an uptrend move, like you see over here. Characteristics of an uptrend are, of course, you have a thrust motion in the up direction is the first sort of piece, part of the move. The background will turn green. The midband and all the bands will start to stair step in an upward manner like such, and the bars will predominantly be blue. Now, the way we trade that, of course, and most of you know this, but I'll just state the obvious, is that we wait for the thrust, and then we patiently need to wait for a retracement or a pullback, which you get right here. So here would be an example of a long buy trade in an uptrend. Okay. Now let's give you some. I'm going to do a few of these at a very high level, so that we all, kind of get on the same page here. And then what we'll do is I'm going to do 2 things. I'm going to show you some more, advanced topics in how to interpret what markets are doing. And then as we progress on into the webinar, then we're going to do like a little series of quizzes where we're going to look at reconstructing some markets in real time, and have the team here make some not only trade calls, but directional calls as far as what the market is doing at any given point in time. So let's proceed forward. So this was the late in the trading session of the 17th. Today, of course, is the 20th. Today's a Thursday, so Wednesday, this would have been Tuesday. Well, actually, Monday going into Tuesday right here. This is the end of the Asian session right here. Asian trading session. U.S. market closes here, 1 o'clock-ish. That would have been somewhere right here. Close of the U.S. market, just as an example. Right in here. So on this particular day, you can see that for most of the morning, the E-mini S&P contract was pretty range-bound, with the exception of this little bip on down here, and then you had a little sort of follow through here. You started to try to get into a downtrend, but going into the European session, which starts at midnight Pacific right here, this is the European session kicking in, we very quickly transition into an uptrend. So the transition point occurs when, in this case, you very abruptly, around 1 o'clock my time, between 1 and 1, say 1:20, transition from this sort of last gasp down, if you will, here, beginning of the European session on the early morning of the 18th, into that fresh sort of spike down low here. Now, notice that as the market starts to push back up through the midband and through that resistance level here, and through this level over here, which had been range bound in for most of the day, like such, this is a rather abrupt V bottom type transition where, you spike on down. You did have a little pause here. I don't know how long it sat here, not very long. You could have actually put a little region box in there using Object Trader and caught part of that long. I don't know where you'd get filled. Looked like it moved pretty quick. You may have had some news in the European session that prompted that to occur. But you can see here, what I'm trying to illustrate is that this transition from the V bottom off that fresh low was pretty abrupt right in here. This area right in here was pretty abrupt, right? spike down, then back up. So what that means is that, and this is something we have to sort of come to grips with, is that these transitions between uptrends, downtrends, sideways to up, sideways to down, any transition from an up or a downtrend to sideways or vice versa, sideways to up or down, can be quick and I don't want to say violent, but very, very precipitous in how they move. Other ones can take time. In other words, a market will go sideways for some period of time, trying to sort out what direction it wants to go. So let's look at some other examples of that. Let's scroll forward into the last couple of days and look for some different examples. But before we do that, knowing what you know, I'm going to go ahead and advance the chart. I just showed an example of a long trade here, and we're going into now the pre-market of the U.S. session. And I'm going to advance this chart. We're going to do our first exercise. So I want to make sure everybody's awake and able to catch this. I'm going to go ahead and advance the chart and reconstruct real time together. And I'm going to help you out here. I'm going to, a long trade or a buy opportunity will present itself. And when you think you see it, you simply type in the letter L for long or B for buy. Everybody ready? Are you awake? Everybody there? All right, here we go. Now you're right here. I see everybody's ready. Okay. So let me just get you oriented here. So this is 5:07 a.m. Pacific time. So you're about an hour and a half before the U.S. equity markets open. And I'm going to advance the chart. And when you see what you think is a buy or a long trade, you type in a B or an L. Here we go. Okay, there's 5:20. 5:33, still in the pre-market session. 5:34. 5:46. 5:57, coming up on 6 a.m. Pacific. 6:13. 6:28. 6:30. U.S. market equity markets just opened. 6:31. Make these bars a little bigger for you. All right, literally there's 6:31. U.S. equity market open right here. 6:30. 6:31. Remember, we're looking for buy long trades. The trend is up. And as I pointed out just a couple minutes ago, we are what we call retracement or pullback traders, right? We don't chase thrust moves. We have to simply patiently wait for pullbacks. 6:31, 6:32. 6:33, 6:34. Okay, I'm going to stop it right there. All right, so I want to address this in a couple of different ways. Here's how I'm going to do it, because some of you might be, and I understand this, we got a good turnout tonight. Welcome everybody. Even if you came in late, don't worry about it. This is recorded. We'll send everybody a copy and post it on the web tomorrow morning. So if you came in late or you got to leave early, don't worry about it. We'll make sure you're covered. But before we do that, let's talk about the following. So in an uptrend scenario, let's start with the simplest of trade setups. And that is what you call a mid-band trade setup. So a mid-band trade setup would be located in this area right here. So what we're talking about is when a market retraces into the band just above the mid-band right here. Stand by for a second, please. So when a market comes into the band immediately above the mid-band, or it comes into the band immediately below the mid-band right here, or the third scenario, of course, is that it sits directly on the mid-band itself like such. This is what we call a mid-band trade. So in this example here, we have a market that has thrust up. Here's sort of the last gasp to the upside to a swing high, a swing high at 16 3/4. And if you notice here that these bars have come into the sweet spot of what we consider to be a long mid-band entry right here. Can everybody see that? Quite often what will happen is that the bars will turn from blue in an uptrend into yellow as they approach and land near the mid-band itself. So a lot of people, or traders, sometimes when the color changes from blue to yellow, feel that is signaling some kind of transition or trend change or something like that. I just want to clear up that it's absolutely not. The bar color change to yellow is just showing that it is, it's just an algorithm here that happens to show more of a neutral stance as it comes into here. But as long as it stays above here, support levels, the trend is still up. So if some of you, now let me go back over here. So this is a mid-band trade, and from a time standpoint, if you typed in B or L for long entry, it would have occurred somewhere right around 6:32 Pacific and lasted until about almost 6:33. So the bar sat here for a minute, maybe a little over a minute, including these bars over here. So, one thing I want to say on ES, and this is why I personally like ES, is that it's not so whippy. It tends to respect support and resistance levels, a little better than some other instruments. And sometimes you can very well sit in these positions for 30 seconds to a minute, sometimes a minute and a half, 2 minutes. So there's plenty of time to contemplate taking a trade here. Now, by the way, at 6:32, this would have occurred in the live room, and I'm certain that we called this, and I probably took this trade in all likelihood long. Now, there's a small handful of you that typed in B's and L's when these bars formed right here, when these bars formed, some of you right here, and when these bars formed right here. Now let me explain what we're looking at here, is that we have what's called a minimum criteria entry trade on a retracement, and it is defined as follows. So after you have a thrust in an uptrend like such, and you pull back, you must at least break the stealth line, in this case the thin sort of snaky looking line right here that's called the stealth, and line 6 in the case of the uptrend, and land somewhere in band number 6. In an uptrend, this retracement into this area right here is considered to be what we call a minimum criteria long entry. So those of you, and I would suggest to you that these bars right here, and these and these and these right here, just sort of barely meet that criteria. True, they break stealth, yes. True, they break line 6. They don't penetrate as much as I'd like to see into this band right here. But nonetheless, they barely meet the criteria for long. So that was correct. If you typed in buy long on here, that met the minimum criteria for a long entry. Now, if you do have a situation where the bars come all the way down in an uptrend, as far as down into here, this can be called a deep probe, a deep retracement, or even a phantom trade. So when you hear that, and it's quite possible that the bars could actually turn the other color, like a red, like such. And we'll look at some examples of that. So what I'm saying here is that as long as the market is trading above this area right here and continuing to retrace and bounce, hit mid-band, hit band 6 in bounds minimum criteria, and even goes deep as here, you are still the trend is up, and you are continuing to buy and take long trades. Now, knowing what you know, I'm going to now advance this chart further, and when you think the uptrend is ending, you don't have to say what it's going into. In other words, it could be going into a range, it could be flipping and getting short, going into a downtrend. You don't have to say what it's doing, but when you think it is, you type in TC, or why don't we do this? Let's just type in a C for change, okay? C for change. In other words, something has changed. I won't make you get specific at this point. You don't have to say that it's gone from up to down or up to sideways or up. You don't have to be specific on what you think it's doing, but just to see if you can notice that something has changed. And then we'll talk about it subsequent to your view of it. Okay? All right, are you ready? Okay, here we go. Remember, when you think, and I'm going to advance this chart, reconstructing real time, we are still in the morning of the 18th, and now we're looking for transition. So let's do this. Let's call it either a T or a C. That something has changed, and the market is, let's just stick with C. Ready? Here we go. Now, right now, of course, you're sitting at about 7:10 a.m. on the same morning where we found that long trade. Okay? And I'm going to advance the chart, reconstructing real time as follows. 7:15 a.m. Pacific. Now, remember here, we're not looking for trades, right? We're looking for change. Something has changed. That's the beginning steps to discuss what a transition could be. 7:19. 7:27, 7:48. Okay, I'm gonna pause a second here. Let me back up and pause a second here. A couple of you typed in C's. Okay, nothing has changed just yet, and it's okay. Some of you, quite frankly, and understandably so, might be looking at this for almost the very first time. So what we're saying here is that as long as this background continues to remain green, we put in a series of higher highs and higher lows, like such, right? We remain above the support levels. The trend is still said to be up, and we are still taking long trades. So here's an example of a long trade here. Here's an example of a long trade here, and the trend is still up, so nothing's changed, right? Okay, let's keep going. Okay, here's 7:30 on that morning. Fresh swing up there at 35 3/4, 7:58 coming up on 8 a.m. Pacific. There's 8:12, 8:23. There's 8:24 Pacific time. Oops, let me get this right here. There's 8:24 a.m. Pacific. 8:25 on this particular morning. 8:27. 8:29. 8:30, 8:32. Remember, we're trying to identify something has changed. You don't have to say what it is, right? We're kind of, still sort of the 10,000 foot level of figuring out what's going on here. So we're just kind of working together on this, right? So 8:35, 8:45. Okay, and I'm going to stop it right there. Now, some of you, many of you, typed in the letter C, signifying change, when you saw this move occur right here. Some of you typed in C when you saw this, and then the rest of you typed in C's when you saw this rollover right here, like this. Now, when this thrust occurred right here, what is notable about the situation that occurred when this happened right here? What is different about this condition from this condition over here? Has something changed here from where into the left of the middle of the oval to the right of the middle of the oval? From this point, this sort of demarcation point, if you will, right here. Let's make this line just a little thinner so you can be more clear about it here. Yeah, there you go, like that. What's different over here, this direction, than what happened over here? And was there some kind of change in market condition that occurred to the right of that line? Most of you caught it. Almost all of you caught it. So total kudos. Well, yeah, okay. The first thing, obviously, that's pretty clear is that the background color changed from green to what we call a transitional color. See how it's kind of like a more sort of beige, opaque type color. It's no longer green. Notice how the midband changes from blue to this yellow sideways sort of color right here. Notice that the prior support levels that had held here, higher support levels, midband levels, what have you, all the way up from that trend, all the way up, was no longer holding, and you pierce it, taking out all the way down to almost the outermost band, band 1, and the bars turn red. Now, when you see something like this, this is pretty obvious that something has changed. Some kind of profit-taking program, perhaps the beginning part of a sell program is kicked in here a little bit. Support levels are not holding any longer. Now, this thrust move in the down direction coming from the uptrend is the first signal that a transition is underway. Now, what needs to happen here, and does happen, to confirm that in fact you have a transition? So here again, what you have is the thrust that's taken out support, background color changes, right? And we thrust back up in what used to be the uptrend direction. But what happens when the market gets to right here? In other words, think of it this way. If this, in fact, thrust down to band 1 with the red bars and the background color change and what have you, was in fact going to be just a deep retracement on what would be a trend continuation move to the upside, then once this bounce occurs, shouldn't there have been a follow-through to the upside like such? Right? You know what we're saying? Right? You know what we're saying? We're saying if this was just simply profit-taking on all that uptrend that happened, all that uptrend, way down, remember way over there, and all the long trades, and everybody's long from market participants from way down over there, right? And so they're up here, and so all these market participants and buy programs are starting to do what after that huge run? Let's look at it. Let's look at the huge run. Yeah. So arguably it started way even lower than this, but let's say it started all the way down here. So you got all these buy programs and all these market participants and all these traders. They get all taking money and all going up, and everybody buying in, buy. And what's starting to happen here? Profit taking, right? So in the case of an uptrend, when transitions begin, they begin with profit taking, and so profit taking in an uptrend will tend to have a natural downdraft to it. Now, that doesn't necessarily mean that sell programs have kicked in just yet. It's taking profits. Buy programs are taking profits. Market participants are taking profit off the table from wherever they got in, from way down here and maybe even lower. Okay, so let's go back in, focus in on the transition just real quick here, so we're all clear on what's happening, and so that everybody can start to see what this means for the market. Let's try to reconstruct this again. And I'll blow it up so it's a little more clear. Let's see if I can get this to do what I want it to do here. Let me bring this back now. Okay, let me position this back here like this. Profit taking has occurred right here. Now, how will we know that when this transition starts to occur, that something more than profit taking is going on, and that quite possibly this transitional area to the right of this line is now becoming something other than just profit taking on an uptrend? What would need to start happening to give us a belief that in fact the trend could be changing and quite possibly sell programs were kicking in, and now we've got to start looking for shorts and not looking for long trades anymore? So the first question in, I see comments coming in, that's good. These are not rhetorical questions, by the way. These are actual questions where I'm kind of, asking everybody to think. Let's go back and blow this up right here so we can get a real good sense of what's happening here. So what we talked about is the fact that when the market did this move, when this thrust down right here with the transition, everybody sees that, and it comes back up here, that when it is boxed in here, you could have literally taken this consolidation box right here and let it go either way in terms of the trade that it could take, yes? Because at this point in time, at almost 8:30 on this particular morning after that big run up, we are not certain exactly when that occurred, that you could get trend continuation, possibly head back up like that, or this could actually be the beginning of what turns out to be sell programs. So this would be a case where you could put a region box at the midband and literally let it go either way. And quite often we'll do that, especially on instruments like the Russell, right? If you trade RTY, the Russell, or the micro Russell, M2K, Roosty's notorious for this, where it will come down, it'll run, come back, poke, do a deep retracement, just like this, right? Just like this. Come back up, sort of dink around the midband a little bit there, and then bam, you get another 60 ticks up, or boom, down you go for 50 ticks. Yeah, so this is important in transitions. This area right here, and I'm going to sort of generally refer this area, and we're going to look at other examples of this, but this is going to help you. So the background color change is important, and a lot of times you'll go into sort of a consolidation period where it'll kind of move above and below the midband a little bit, kind of like that. Sometimes it's little tight ranges like this. Sometimes they're a little bit bigger. And then the resolution of this transitional area is what tells you what the final direction is going to be. So now, if you had enabled this box, long and short, as I've shown here, then of course you would be filled short on the close of one of these bars right here, either that one or that one. And then, of course, you can see that it spikes down and takes out support, and off you go with the sell program kicked in, and now you're short. Well, in the case here, OM, asking when would you be filled short or long in this box, it really is a function of how you drew it. If you engulfed the bars like such, you can notice here at the top of this swing level here, at what appears to be 3150, that there was no bar that ever closed up through here. So there was no long trade triggered to the upside, so this did not happen, right? See that? And if you had engulfed as I've shown here, then one of these bars here would have filled you short. Either this one or, quite possibly this one over here that closed outside the box to the downside. So the bars closed outside to the downside. So the way it works is for those of you that are new and not familiar with the situation, we use what's called an object trader box. You could put limit sell orders in here. It could be filled. You could put limit buy and sell. If you do it manually, of course, you have to manually put your targets and stops. It's not terribly difficult, but the OT tool was built to handle that for you. In the case of the short trade here, normally most E-mini S&P stops are 10 or 12 ticks, which would put the stop. I don't have an exact number. In the case of the short, we'll probably put it up here somewhere. You want to go, just a couple ticks above the top of this range in case it whipped around in here a little bit. So when this bar closed down, any one of these bars closed down, a market order is fired and you're filled short here. Let's do some quick numbers here. I'm trying to get this thing here. So let's give you a number. Let's say 29 even. 12 tick stop would be 30. What is that? 29 plus 32. 12 tick stop. That's way up here. Of course, you don't need to leave it there. 12 ticks from your fill here. That's a pretty big stop. I mean, once the object trader puts it up here, you can drive it, drag it down within a tick or two of the top of the box and make it a lot tighter. It's probably about 9 or 10 ticks right there. Now in the micros, of course, that's going to be 1/10 of the exposure. So instead of $12.50 a tick on the micros, this is $1.25. So a 10 tick stop on full ES stop out on 10 ticks would be 125, whereas only be $12.50 on a one lot on a micro. Okay. So let me read out some feedback here that may be helpful to everyone in here tonight, and those of you listening on the recording here. Mario giving some good feedback here that he had heard from one of my comments on a previous webinar, very similar to the situation you're looking at here, that said it's ingrained in his head. It's not what happens at the retracement per se that matters. It's the follow through after the retracement happens. So that's important. And the reason that's important is that, and in particular in the live room, right? Let's say, for instance, let's look at a long trade example. That might be a little bit better. So it's quite possible that, let's do a hypothetical. At 7 o'clock, ES is up here somewhere, trading up near the swing highs of the morning, just as a hypothetical example, okay? And you hear a call out in the live trading room that says something to the effect of, if ES pulls back, we call it SE in the room, Esmeralda Sue, we have joke names for it, but it's the E-mini S&P contract, right? If that gets back anywhere around the mid-band at 2650-ish and bounces, of course the trend is up, we're looking to get long. And so what that's saying, there's two parts to the comment. If it pulls back to here is comment part 1. And it did, right? Came right back to where we wanted it to, here. Came to the midband. It is physically sitting right on the midband. So by definition, obviously, that isn't a midband trade. But it's not necessarily what it does on this retrace alone. The second part of the trade comment, and Mario pointing out here, and it's a very good point to remember, it's what it does after it gets to here. Of course, you can see it bounced, and if you had engulfed it with a object trader region box, you'd be filled long on that bar right there. Market fire close at 27.75 long right there. Okay, everybody seeing that? So the retracement in and of itself, and having the patience to wait for it to occur, is a skill set that's very important to develop. But then in addition to that, once it gets to the area of opportunity, in a lot of cases the mid-band, we have to be prepared to take action. Now let's contrast that with what happens right here. Let's do an opposite scenario. Let's say, for instance, it's coming up on 8 o'clock, and let's pretend that we leave the live room open for a while. And you hear a comment when you hear it come up to 36.50. Somebody in the live room says something like, you know, if it comes back to the if it comes back to the mid band and bounces, I would look to get long down here around 30.50. Now, you can obviously see that it did part one of the comment here. Arguably, these bars do come right to and go through the midband. But unlike this scenario here, where this holds and you get a legitimate long bounce, did this condition occur here to the right? In other words, was there follow through? Did it pause and stop, and did it bounce like we wanted it to at 8.23 at the midband at 30.50? No. Everybody sees that, right? No, it did not do that. It plowed right through it like it wasn't there. So just to be clear, I want to be explicit about this. When we say that in the two-part comment, when it pulls back to here, I'm looking for a bounce to get long. Likewise here, if that comment occurred here, hypothetically, and the room was still open, and it plowed right through it, you got no trade here. There was no long trade here. It never stopped and paused and bounced. And even if you boxed it here, there was not a likelihood that you got filled, because it never came back above the midband, even there, right? And then plowed and went down. So there was no long trade ever occurred here. There was no follow through or bounce at the midband. And then, of course, you can see here we got the transition where we push down, we come up, we engulf the bars at the midband itself. At the time this occurred, if you were still trading at 8.30, you could have let the box go either way. We did not get filled long. It never closed above resistance at 31 even, right? We were filled short, if you draw as I had shown, on one of these bars right here, somewhere in the 29 even area. Your initial stop would have been up here, 12 ticks, 32. You dragged it down to here. It never hit it. You got the scalp off, and then the sell programs come in, and you make it. That turns into a nice trade. Does everybody follow that? I spent a lot of time explaining this, but I know some of this might seem a little, redundant or a little bit overkill, or we seem to be talking a lot about, what's going on around these mid bands and the thrust and the thing of transition. When you trade these markets, I think everybody's going to start, and you really get active with it, especially with your live money accounts, you're going to really start to pay attention to the detail we're showing you here. Because I'm telling you, it's in the detail. It's in the little nitty-gritty details where most of the money's made. Of course, you got to understand the big picture too, right? I mean, that goes without saying. Are you in an uptrend? Are you in a downtrend? Are you transitioning? Is it going up? Is it going down? Should I be taking longs or shorts? Should I hold off? Okay, that clear? James, red snaky line indicate the bounce would occur at the midband. Are you talking about which snaky line here? This one right here, James? This red sneaky snake stealth line right here is portending that it might not bounce? Yes. That? Yes. Louis, yes, this is excellent. I like the fact you go over it. Redundancy helps enormously. Okay, Louis. Good. All right. Good. Excellent. All right. Tell you what we're going to do now. I want to do one more thing before we come off of the ES chart, because it seems like everybody's sort of getting a good feel for how this works. I'm going to continue this ES market on this particular morning. And we all agree that the transition has occurred. I'm going to pull up crude next. Louis, let me do one more thing on here, and then I'll get a crude chart up. Okay. I'm going to advance this chart, and when you think you see a short setup, you type in an S. Okay? Let's pretend that after 8:45 we're still trading, and I'll help you out. It's going to be a short trade. But when you think you see it, you type in an S. Okay? All right, here we go. Let's do this last thing, and I'll get crude up. All right, here we are, 8:38, 8:45. The room has closed at 8 o'clock, so you're on your own. That's why we teach. Make sure everybody can see this. We have a lot of traders that trade on their own overnight, during the day. Currency futures overnight, European session. There you are, 8:55. 8:57, you're looking for shorts. 9:08, 9:09. 9:18, 9:21, 9:34, coming up on 9:30, 35, 36, 9:36. Remember, you're looking for shorts. We're pretending like we're still trading ES together, even though the room's closed. Okay, there's 9:40 a.m. Pacific time. Remember, you're looking for shorts. We're retracement traders, remember, right? Remember? Okay, there's 9:46. Patiently watching this market for about a half an hour, 40 minutes or so. There's 9:58, and there's 10 o'clock. Now, let me go back and reconstruct what happened very quickly, and then we get on to crude. I want to say, I think there were a few of you that typed in the letter S, signifying you would take a short trade when the wick of this bar occurred right here. I mean, I'm not going to put a box around it. That's not right. I'm going to put a circle, an oval around it. Now, as far as the wick of that bar is concerned, does the wick of the bar meet the criteria of a minimum criteria entry short? You could make the case that the wick of the bar does, but didn't we say we really need to see bars closing up into this band right here to meet minimum criteria short entry? You got to come up into, above line 2 and above stealth and close and get bars up in here like you got here. Now, if you typed in short here, which a lot of you did, and if you typed in short with these bars formed right here, you were correct. That was short entries right there. Definitely, no question about it. Minimum criteria, mid-band. Mid-band, of course, being in the band just underneath the mid-band. So that's by definition a mid-band trade. I would not consider that to be a legitimate trade. You've not retraced. Now, it did work out. Had you taken it? Yeah, you've probably got a scalp. But, without closing up, like these bars here, into band 3, I wouldn't really call that a trade, legitimate trade entry. So this turned out pretty well. That was a good short. Most of you got that. Now, I want to be clear here about something. And if this is you, and I know it's some of you in here tonight, is some of you didn't type in the letter S signifying short trade entry until the bars were down here. And a couple of you squeaked it in when the bars were forming down here. Now, of course, that's a no-no, right? We know that's a no-no. The trade is already set up. Traders are already short from upper levels. Okay, some traders are short from over here. Some traders are short from wherever. Some traders are short from here. Market participants are shorting the market. This is the thrust portion of the downtrend, right? This is the thrust. The thrust is down. So once you see a market is here, you don't, generally speaking, for the most part, you don't want to buy or sell thrust moves. This is a total no-no. And why this is important, and you're going to see this a lot when you learn the system and you start to trade it, there's a lot of cases where you're going to come into a market open, right? You pull up your charts, you log into your data feed, you're getting ready to trade, you log into the room, life is good, you got your cup of coffee, your dog's all set, or whatever. Okay, you're ready to go. And the market is sitting like right here. This is 10 o'clock in the morning. I'm doing a hypothetical. Just stick with me here. You come up and you pull up your charts and a market has done this. The natural tendency of most people, most traders, is to want to go ahead and jump into a short right away because you see it going down. The background has gone from transition to red with this thrust right here. So you went from up, sideways, transition, thrust, red background, stair-stepping down, downtrend, retracement, short entry. So the healthy thing to do, and it takes a little bit of time to learn this, but it's really important that you do this, is you can't, it's easy to look at the bars that are right in front of you and then try to make a trading decision on what you see right here. But what you have to do, and Gary has a good saying, I like the saying, one of his sayings is, look to the left to trade the right, and that's actually a very good saying. What that means is you've got to look back this way and see what happened ahead of the bars that are right in front of you. Because this would tell you, when you did that, when you look to the left, of course, is that the trade setup was actually right there. And that you were already in, you should, if you had not taken a short here, should already have been in the short, and now you have to wait for a retracement. Is everybody clear on that? Yeah, if you take those thrust moves 8 or 9 out of 10 times, it'll come right back in your face, Louis. That's why a lot of people get stopped out. Okay, good. Any questions on trends and transitions on ES and how to trade them? Let's get crude up here. Well, the circle, no, the circles are not okay. To the right, these ovals. No. That's what I'm trying to say. Just to be clear, the trade was here. The trade setup was right there. That was the trade entry right there. You should, when you are in this short, you are taking scalp money and trailing stops. You're actually trailing stops here and taking profits already. This is not trade entry. This is no. Okay? All right? Okay, good. All right, let me pause the, I'm getting ready to move off to old crude oil. Okay, you see that. Okay, good. All right, give me a second here. Let's get a crude chart up here. Let's get crude up. I know a lot of you trade crude. Let's talk about some crude trade entries on the August contract. Now, crude, of course, is $10 per tick of movement. That is in our live room on the bottom right part of the screen. Gary, of course, is a very active crude trader. I'm not as active in crude as Gary is. He's very active in it. I do occasionally take a trade. If I really like the setup, I'll jump in and take it with him. If I'm not really, happy with the setup, let me put it this way. I'm a lot less aggressive than he is in taking trades on crude. But occasionally I'll take a crude trade if it's a good, juicy one. All right, so I've got a crude chart up here, and let's do a quick exercise together. Let's see how good you are at spotting crude trades. Okay? I'm going to give you a couple quick, easy ones, and then I'm going to give you a couple tough ones. I know, yes, I'm teeing it up right now, James. Just give me a second. I'm teeing up a crude chart right now. I'm going to lob up a couple little softballs for you. See if you can nail a short or a long. I'm not going to tell you. I'm going to start getting a little tougher. I'm not going to tell you what it is. And then I'm going to give you some toughies. All right. Okay, here we go. Excuse me. I have a little tickle in my throat. Okay. All right, here we go. Now, I'm going to advance this crude chart. I don't know. I think this was either today or yesterday. I'm at 8 a.m. Pacific time. And you tell me by typing in an L or an S when you think that you see a long or a short trade. And we're going to start at 7:25 a.m. And I think this was today or yesterday. Ready? Let's do an exercise together on crude. Don't type anything in now. We're starting the exercise at this moment. And the time is 7:25 a.m. Pacific time. And I'm going to advance this chart. And when you think you see a long trade setup, you're going to type in the letter L. When you think you see a short trade setup, you type in the letter S. Is everybody ready? Based on what you know on our indicators. You want me to leave the predictors on or not? What do you think? That's off. Excuse me, that's on. That's off. Any preference? Preference, one way or another? Doesn't matter. Either way. On? Leave them on? No preference? Tell you what, for this exercise, we'll go ahead and leave them on. All right, starting to advance the chart. L for long, S for short. When you see the trade setup that you would take, on crude. 7:27 a.m. Pacific, 7:28, 7:29, 7:30 Pacific, 7:31. Trading crude. You're trying to make a trade call on crude, and we're reconstructing 7:30 a.m. Pacific time on this particular morning, which I don't know if it was today. It could have been yesterday. We're looking at price action. 7:32 Pacific, 7:33. Type in an L for long, S for short. 7:35, 7:36. Time is up. All right, so first thing we're going to make note of is the fact that when we look at this chart, we have to notice that crude oil on this particular morning was very definitely in a very clear uptrending move, okay? And I'll just signify it by putting a arrow on the chart that looks more or less like this. Okay, we're trending up. And so by definition, in an uptrend, we are looking for longs only until we transition into either sideways or down. So the first thing I want to make note of is that you should have been looking for longs, right? So get that right on the table. Now, I think I started to show this chart when it was right about here. So it was peaking. And I want to say, I'm just going to take the predictor off just for a second, that I did not see any L's come in up here. So I'm very encouraged by that. I want to give everybody kudos and gold stars. Nobody bought the thrust. You see all that was the thrust, right? You saw that was the thrust. There was a minimum criteria here, and there was other entries down here to get long, but this is not where you want to get long. So everybody in here, total kudos, waited for a pullback. Now, a lot of you typed in L's when you saw these bars form right here. So looking back on it now, all of you, everyone in here, when these bars formed here, did these bars meet the criteria for minimum criteria? Entry long. Did they close below the green stealth? Yes. Did they close below the green line 6? Yes. And so the answer is yes. Anywhere when these bars formed here, here, and here were minimum criteria long trade entries. Yes. Oh, this is a 2. I should have had a 4. Let me put a 4 up. Sorry about that. Who just noticed that, Richard? Oopsie. If I change it now, it's going to mess up everything. This should have been a 4. My apologies, everybody. So you're getting a lot more bars than I should have done here. I should have had a 4 up here. So it's going to be twice the number of bars. Sorry about that. I should have caught that. Thank you for pointing that out, Richard. Just caught that. And then many of you typed in, I saw a lot of L's for long trade when these bars formed right here. That's a textbook mid-band long trade entry. Filled long on the short, on the close of that bar right there. And then, of course, when these bars formed here, another long entry there. So you had 3 spots, 1, 2, 3, 4, 5 bar formations to call long trades only, which turned out to be a beautiful long trade here, and then up it went. It was just beautiful textbook long trades. Almost all of you got that. Now, with this one right here, where you fill long out of this box and would you have stopped out, it's hard to say. It really depends on where your stop was. If you get stopped out, if you get a scalp and you get stopped out, you could always re-enter here. Right? You can always double up and re-enter there. The 4 would look exactly like this. The only difference would be is you'd have half the number of bars. But the entry technique long would all be the same. Nothing would change as far as the trend was concerned. You just have a little bit less bars, half the bars. Right here. So long here, long here, long here, mid-band long. This is also technically a mid-band long trade right here. So that was your thrust. Here's your retracement. And here's your bounces right here. I should have fixed the 4 range, and I think I was talking while it was paused. Can everybody see this? Everybody get this right? Let me give you some times when you called this in. All of you that called this in here. First one set up at about 7:27. Some more bars set up at 7:28. This last one, which was not filled, at 7:30. The mid-band actually occurred at 7:31-ish. And then, of course, you can see right here you had one more box set up at 7:33, 7:34. That would have been filled long. This would have been filled long here. And depending on when you started to draw this box, this possibly would have been filled long on any one of these bars here. It may have stopped out, may not, depending on how tight your stop was. If you filled in on this bar right here, 63, you got the 54, that's 9 ticks, a 12 tick. If you filled long here out of the box, a 12 tick initial stop would actually have you down here. So you would have had a choice. You could have reboxed it here. You could have entered here if you didn't draw this box. Or you could have just held your initial entry. You would have felt a little heat, about 9 ticks of heat, on any of these long entries coming out of this box right here. A little bit of heat, but it held the mid-band. In fact, you could have bought more down there, obviously, and added some. Or just held your initial position from that fill on that bar right there. And then, of course, you can see up you go with a beautiful long trade. Kudos, gold stars. Everybody got that. Everybody got the long trades. Nobody bought the thrust. Everybody got the pullbacks. And I didn't see any short calls, only longs. That was perfect. All right, we're running over a little bit here. I wanted to show a little bit more crude, but we'll table that for next week. I'm going to go ahead and stop the recording.